What's going on, guys? In this video of Should I Invest, we're going to be talking about the famous, the most popular, the big short squeeze, GME. Let's get right to it. So we got our handy dandy MARKETSMITH tool, which is going to tell us all the information we're looking for, exactly what we need to make a decision on whether we need to buy this stock for the long term. We also have our handy dandy Excel sheet. It's going to give us all the good information. And of course, we have Yahoo Finance to help along with all of that. All right, so first and foremost, we're going to use our Excel sheet here. We're going to plug in GME. All right, we can see it's pulling up data here. Perfect. So we got the stock price, we got the market cap, we have the shares, and we have the EPS, another negative EPS. So therefore, most likely the PE is going to be unavailable. But let's take a look at the PE. Here we go on MARKETSMITH. The PE ratio is right here, and A, just as I thought. So that's going to be another 0 as well. All right, so now let's look at the return on equity. All right, again, simply because of PE and the negative EPS, the return on equity is also 0. All right, now let's go look at total debt to total asset ratio. All right, so we're going to go jump into Yahoo Finance. I'm going to pull that up here, and we're going to look at the data on GME. All right, so we're going to plug in GME here. Perfect. That's going to come up. We're going to go to financials, and we want to look at the balance sheet. All right, so what are we looking at again? We're looking to find the total debt and total asset so we can get the ratio. So the total debt, we're going to come down. We're going to come down to total liabilities, right? That's your debt. So we're going to come here and plug that in. And then we got total assets. We're going to come up here, total assets. Perfect. Ooh, surprise. So we got a green figure. So that means your assets can take away our debt just in itself. All right. Now we're going to look at current debt to current assets. So where do we find that? Well, right here. Total current liabilities is right here. And then we got total current assets up here. Perfect. Again, another positive figure, which means anything in the next short term that needs to be paid off, we could cover it with our current assets. So that, based on the fundamentals, is okay. All right. Now we're going to look at operating income and total revenue. All right. So let's go ahead and see income statement. All right. We're looking at operating income. All right. Total operating income. They're operating at a loss of minus 156,000. All right. Total revenues, 5.59 million. Interesting. All right. So the income statement, obviously it doesn't balance, right? You're at a negative operating income with a revenue of almost 5 million, and the number is minus 9 here. Okay. So next thing we got to look at is cash flow, right? Is the cash flow increasing or decreasing? So from January 2020, we went from minus 490 to January 2021 to positive 63,000. And then the following year we dropped, and we're still under. Okay, so is the cash flow increasing or decreasing? The answer to that is decreasing. Now let's go and see how much management actually owns the stock. All right, so to see that, we got to come here. We can see management owns 12% right there under ownership, and we're going to plug that into our Excel sheet. Perfect. So management owns about 12%. All right. Now, are the funds ownerships increasing or decreasing? That's something we got to pay attention to as well. So we got to come here to the fund ownership. We're going to look at the funds. March 2021, we had 310, 330, 360, 389, 369, 365, 338. Looks like they were falling off here coming into September 2022, but going into the last month of December of 2022, looks like we had a few more, almost 30 more funds pick up the stock. All right, so overall, I would say it is decreasing because we don't have enough data to see what's going to happen in the next 3 quarters, but from 2021 till 2022, funds have been decreasing. All right, so we're going to get ourselves a fat fail here for GME. You can see right here we have that fail come up, and that's simply because there wasn't enough green on this list. All right, we didn't hit enough green things. We didn't meet enough criteria for this Excel sheet to give us a pass. All right, now let's take a look at the actual chart. So relative to AMC, you can see AMC started at around 230, shot all the way up to 64, but we did the analysis on AMC as well. Take a look at GME. All right, when this thing really started taking off, $4 pushed up all the way to 115. It's still holding most of that entire move, right? It's sitting at around 20 bucks currently. What is it at? 18.70, right? So it did a decent job holding up considering, all right? Not to say I'm investing in this stock, not to say I even like this stock or this company, but a lot of you guys have asked me for this information, so I have decided to put it out there so you guys can see at least the basics of the fundamentals and what is going on behind the pictures. Personally, not something that I would invest in long term, and that's that. Hopefully you guys found value in this. If you did, go ahead, subscribe, like, and comment down below what stock you want me to do next. Thank you so much, and we'll catch you next time.